Thinking about getting an electric car? They promise a quiet ride, clean energy, and a greener planet. But there's a secret that many new EV owners are discovering the hard way, right in their mailbox. In 2025, the average driver of an electric vehicle is paying up to 45% more for car insurance than someone with a regular gas-powered car. So, what's going on? Tonight, we replugging into the real reasons behind these shocking premiums and telling you what you can do before your next renewal notice arrives. When electric cars first started becoming popular, insurance companies actually saw them as low risk. They have fewer moving parts, no messy oil leaks, and definitely no exploding engines. It seemed like a win-win. But by 2025, insurers have learned a very expensive lesson. EVs are incredibly pricey to fix, and even just assessing the damage is a huge challenge. Think about it. Replacing a cracked bumper on a normal car might set you back around $800. But on an EV, that same bumper is packed with sensors, radar, and thermal wiring. That simple repair can suddenly skyrocket to $4,000 or even more. This is why your EV insurance premium now looks like it belongs to a luxury sports car. At the heart of every EV is its battery, and it's also the biggest financial risk. If that big lithium-ion pack gets damaged in an accident, insurers often won't just replace a single faulty cell. No, they usually have to replace the entire unit. And the average cost for that? A staggering $15,000 to $25,000. Even a minor fender bender that happens near the battery can lead to the insurance company writing the car off completely. Why? Because the safety checks are so complex and take so long, it's just cheaper for them to total a $60,000 car, even if it still drives perfectly fine. Modern EVs are basically rolling supercomputers. They're loaded with hundreds of sensors, cameras, and AI chips that all need to be perfectly calibrated to work together. A single software glitch could disable the entire safety system. And when it comes to repairs, you can't just go to your local mechanic anymore. You need factory-approved parts, technicians who are certified to work on high-voltage systems, and special diagnostic tools that only the manufacturer provides. So, while EVs are mechanically simpler, all this tech makes them financially complicated. Insurers have to price that uncertainty into your policy. Speaking of technicians, there's a massive shortage of them. In 2025, there are fewer than 5,000 certified high-voltage repair specialists in the entire United States. This scarcity drives up labor costs and creates huge delays. We're talking about waiting months for a single part to arrive. The longer your car is stuck in the shop, the more the insurance company has to pay for your rental car and other claim-related costs. And guess who ends up footing that bill in the long run? That's right, it gets passed right back to you, the driver. Then there's the fire risk. While EV battery fires are statistically rare, they are intense, expensive, and they always make headlines. It can take over 10,000 gallons of water and specialized foam to put one out. A single, widely reported incident is enough to raise the perceived risk for the entire industry, causing insurers to hike rates for everyone. When a company is managing billions of dollars in potential payouts, perception becomes reality, and that reality is reflected in your premium. There's another new risk that didn't exist with older cars: cyber liability. Your EV is constantly collecting and transmitting data: your GPS location, camera feeds from all around the car, even your driving habits, and syncing it all to the cloud. This opens up a whole new world of potential problems. If a hacker manages to breach your car's system or the company's data servers, who is legally responsible? Is it you, the automaker, or the insurance company? Nobody wants to get stuck in the middle of that lawsuit, so your premium now includes an invisible cyber risk buffer, just in case. So here's the paradox. EVs are great for the planet, but they can be tough on your wallet. They're efficient to run day to day, but incredibly expensive to insure. Governments are pushing people to adopt them with tax credits, but insurers are recalculating their risk much faster than those subsidies can keep up. Analysts predict that unless the cost of repairs comes down, EV insurance will remain 30 to 50% higher than for gas cars by 2030. But don't lose hope. There are things you can do. First, compare insurers that specialize in EVs. Some new startups even offer battery-only coverage. Second, ask about installing telematics or a safe driving app. Sharing your driving data can prove you're a low-risk driver and cut your rates by up to 15%. Also, maintaining an extended warranty on your battery can reduce the insurer's risk. And finally, simple things like parking in a garage can lower the risk of theft and fire damage. Electric cars are changing our world, and the insurance industry is scrambling to keep up. If you're an EV driver, the future is here, but so is the fine print. If this video helped you understand the real cost of going electric, hit that like button, subscribe to our channel, and share this with a friend before their next renewal notice arrives. Because in 2025, even clean energy has a hidden price tag. Thanks for watching.